Hi, fellow traders. What's happening? Man, it's been a long time since I couldn't wait for the week to end. And I really couldn't wait for this week to end. I ended March on a sour note. I started April off on a sour note. We did finish the week pretty good, but I was so ready for it to be over. I'm ready to wind down, relax, and clear my mind and get ready to go Monday. So I can't wait for the new week to start. Typically we can hop in the car and head to the beach or head to the coast, do something. But we can't do that anymore. Right now, it's going to be a while before we could do our little family trips and excursions on the weekend. So I'm going to have to deal with everything right here. But we're adapting and we're doing good. So I'm going to be ready for Monday. But I want to share this with you guys real quick. When you can't control what's happening, challenge yourself to control the way you respond to what's happening. That's what a power is. That's where you seize power over a seemingly uncontrollable situation. The market, we can't control the volatility. We can't control the volume. We can't control the people that come in and trade it one way or the other. But what we can control is how we respond to the way the market is moving, and how we execute our strategies in the market. And we have to be consistent with it. If we're constantly changing and we're all over the place, and the market is changing and it's all over the place, you're never going to get anywhere. You're going to continue to spin your wheels. You may spiral out of control. You may lose everything, but you have no power over anything. So if you come into the market and you execute every day, you come in, you do the same thing every day, you're constant, you're consistent, the market could be all over the place. All you do is wait for the market to come to you and meet you on common ground. And that's all we have to do. But it's hard. It's really difficult. And you'll see, and I'll talk about it here in a minute, how I wasn't patient enough. One of the biggest virtues I have is my patience. But the volatility and the way the market's been trading, it's caused me to make some mistakes. And that's what happens. And it's okay. It's all part of this. This is the first time we've ever traded a market like this. Anybody that tells you they have is lying through their teeth. This is the first time that anybody has experienced this type of market. Some people, may be nailing it, and some people may be blowing up. But whatever the case is, I'm going to continue to control the way that I'm responding to the market, that I'm going to sit back and wait and allow the market to come to me. And then I can execute. So in that respect, the power lies within me, not within the market. I have the power. And you guys, you have to seize the power. You have to control the only, if you think about it, the only thing in this that you have 100% complete control over is how you react to the market. That's what you got to control. When you do that, you seize the power back. So please, please, please challenge yourself to control the way that you respond to what's happening in this market. That you exercise some patience. That you're learning. You're learning from my mistakes. You're learning from your mistakes. You're learning from others' mistakes. Because in this market, we're going to make it. But you know what? We're going to have that notebook. We're going to have everything that we need so that the next time we experience something similar, we know exactly what to do. And so how does that happen? And you look at, this is education model that I use. I kind of adopted it from my teaching, but one key element is reflection and journaling. And somebody in the chat today said that they stopped doing journaling and all of that. And I'm gonna tell you, if you don't reflect and journal, there's no way in hell you're gonna be a successful trader. You're wasting your time, you're wasting my time, and you're wasting your money. Bottom line, and I'm not the type person that's gonna sugarcoat anything. I'm not gonna lie to you to try to get you to do what I want you to do. That's just not the way I roll. But reflection and journaling, it allows you to assess how your strategy is being implemented in the market. Are you doing the right things? Are you waiting? Or are you not trading the strategy the way it's supposed to be traded? And if not, why? What are you seeing? What's happening in the market that's making you do these things? The only way you're going to get better and prevent these things from happening is to reflect on the trade every day and then journal it. That's the only way you're going to do it, that you're going to get better. So just remember, if you're not going to do this, you just quit, because you're wasting your time, you're wasting your money. You have to journal. You have to take notes on especially when you're learning. Especially when you're learning. But it's important even if you're a professional trader to reflect on each trade and make sure you journal it. So when you come down this path again, you've got everything there waiting for you. You don't have to think twice. All right, so let's take a look at today. All right, BA, we started out, again, the typical stocks that we trade, the ones that are on earnings, that have other catalysts, they are not getting the attention. The stocks that are getting the attention are, I guess you could say, the high beta names, or the more volatile stocks that they're moving with the market. And that's why we've been trading these same names over and over and over again. But there are other names you could trade too. If you have the capital, you could trade Tesla. That thing sold off really good. Now we got a piece of it yesterday after market. A piece of that 80-point move. But look at what it did today. Facebook, Apple, Netflix, all of these stocks you can trade. They're trading with the market. They're making moves. So that's basically what we're doing. And the one thing I want to point out, and I've said this before, these type stocks, if you don't have a legit catalyst, the opening range trades don't work as well. They're not as clean. They don't work as well. When you get one to set up, you may get to the first target like we did here. And that's kind of what we've been doing whenever I traded the strategy right. But in this case, here's the opening range high. I bought it on the break. And we did make a run up, finally hit the target. 128 was my first target. It couldn't push up anymore. It turned around and came back, and we stopped out at break even. And we waited. I sat back and we waited and we waited. And I said, I didn't want to take this short. If you look at this, this is still in an uptrend. We've not established a downtrend yet. We haven't broken the uptrend. So I'm not looking to short this. And like I said, I wasn't looking to short it until we established under this green to red line here, this white dashed line. And we sold off, bounced back, rejected, And then that tells me that we are establishing a short trend. That never happened. And that's why I continued to say I was looking long. I was looking long back over this opening range, this 5-minute opening range. And what we've seen time and time again, when the stock puts in this range at the open, it tends to respect this level practically all day. It will come into play. And you can see we rejected here, but when we bounced off the opening range low, we made a run up. We broke over it. I was waiting to go in. We never confirmed. This candle never made a new high relative to this candle. Never triggered me in. We had a deep pullback. We kind of went through the opening range low. Guess what? This candle never did confirm it. So we bounced and we traded back through all of this resistance, which became support. So we were waiting for this and waiting for this and waiting for this. So we had to go to the pharmacy, pick up my wife's medicine, and I had to take my mom her groceries. But when I got back and I sat down, BA was trading either on this candle or this candle. It was trading on one of these candles. It had already broken out. And I lost it. Now, if there's one thing that's going to have me come unglued, is that if I sit around and wait on the stock all day and I missed the entry because it just exploded out of nowhere and took me out. I was watching this on my phone and I would have gotten in, but you could see where we were. When I left to come home, we weren't anywhere near this yet. We were still building up. So I figured by the time I get back after 1:30, I can sit there and we'll get up. But you can see what happened. I wasn't going to chase it. I wasn't. But I was hot. Now, I could have chased it. I would have made some money on this. But I'm not going to break the rules. I'm not going to do that. Because the next time it may not work out. And I'm going to fall into that cycle that nobody ever wants to be in. So we moved on. I got over it. Had to make a little drink, calm myself down. And we got hold to Zoom, to ZM. Same move. It did the same thing I was looking for on BA. The same move. I caught it over the opening 5-minute opening range. We were still trending up. So this isn't an opening range breakout. Both of these would have been trend continuation trades. This was a continuation of the uptrend. I just needed it to get into a window that I could take some good profit in. All right, so I got in here, took some profit here. I'm getting ready to I'm getting ready to put in my order. And again, I'm so used to shorting, I just, second nature, I put in a buy order. And of course it automatically filled, so I added back to my position. And so I ended up with 150 shares. Because this was 50 that I added short on that I bought right here. I bought 50 extra shares, which put me back in at 150 shares. And I took some profit here. And I was messed up. Here's where I was supposed to take profit. All the way up here, 127. Since I had messed up my average and added to it, I should have taken profit here. If I hadn't have added, I would have taken profit here, like 127.25. because I was looking at the break of 127, and then here I would have been just waiting to see where we could go with this, but came back down, stopped me out within a couple of cents. I had to stop out at break even. If I hadn't have added and I was still in a position, I would still be in this trade. Could have added back and caught the move again, but this time I waited. We bounced. I got back in. Had to withstand a little bit of pain here, but then we ripped up to my first target, 128, and then the bell rang. I had to get out. I wish I had held it for about 30 more minutes because this thing pushed up another 1.5 or so. Right up to the daily 20. You can't see it on here because it's just out of reach. But the daily 20 was up around 130 or somewhere in there, a little over 130. But really nice patience. I shook off the disappointment of BA, and we nailed this trade. Same setup, the other stock that we were watching today, and nailed it. So we ended up closing out today 689.07. So strong Friday. I'm glad to end it strong and ready to move on. All right, so you can see on Wednesday we started out pretty bad, 592.02. Just couldn't get out of my own way on Wednesday. And it was just a continuation of the end of March. But Thursday, we picked it up a little bit, did pretty decent. Today, we did pretty good. So only ended up 415.27 for the week, but we only have 3 days in this week for this month. So it's going to look pretty bad, especially since I had a red day on Wednesday. Now, the last quarter, we kept up with my accuracy overall, like how many winning trades and losing trades I had and what my win rate was. Now, this quarter, we're going to track the opening range strategy. And here's the thing. Unless you do your reflection and you get a quarter's worth of trades under your belt, you can't say anything about the strategy. Because I'm going to tell you, 9 times out of 10, when you lose on a trade, it's not the strategy, it's the trader. The trader screwed up. On Wednesday and Thursday, I traded an opening range breakout that never set up. So it wasn't that the strategy failed, it was that the trader failed. And that's what happens most of the time. We blame our strategies. We talk about this strategy doesn't work and all of this. The problem is you're not working. And the reason why you don't know it and you don't accept it is because you probably aren't doing your reflection. And you probably aren't journaling like you're supposed to. If you were, you would see things just like this. This is the opening range candle. Look at, there's a rule about these type of candles at the open. There's a rule about it. I broke it. This is actually the opening range low. This is actually the opening range high. I tried to run off the body and just waited until it got under the pre-market low, and then I jumped in. That's not the opening range breakdown or breakout strategy. That's not the ORB strategy. So guess what? It wasn't the strategy that failed. It was a trader that failed. Got an F on this trade. All right, and this is the day that I lost on the first trade, lost on the second trade, and that was that. I had to go on the bench. Because that's when I sat back, reflected on this, took some good notes, just really looked at the chart and I said, you know what? This isn't even an opening range breakdown. It's not it. So trader error. Thursday, yesterday, trader error. What time did I get in this trade? 10 o'clock. After 10 o'clock, what has to happen if we're going to trade off of the opening range low? This candle needs to close below the 5-minute opening range low. This candle needs to make a lower low to trigger an entry after 10 o'clock. That didn't happen. It's not an ORB fail. It's a trader fail. After 10 o'clock, I didn't do the strategy. I didn't implement the strategy. This never set up. So I took a stock that never set up. F. Big fail. So this is why it's important to go back, reflect, journal, take notes as to what's happening. You take notes on the stocks that was on earnings today. We had a couple stocks on earnings, did not trade worth 2 cents. All right. All the value were in these stocks like BA, Roku, Tesla, Facebook, Apple, ZM. That's where the value was. RCL. I mean, just all of these stocks that didn't really have a catalyst, but they're moving with the market. They're in tune with the market right now. They're volatile. That's where the value is. But it's really hard to trade, and you have to be patient and wait for the market to come to you. Just like we did right here. Was patient, waited for the market to give us our trade. We missed the other stock we were watching, but we caught the same move on this one. And we took it to the house. So that's the lesson I really want to share with you guys. You have to trust the process. If you don't trust the process, it's going to be hard. I've got the Roadmap to Success series is my roadmap to $1 million. It is. And you members get it for free. You pay for your membership because I've got to pay for the platform, for the community. You know, that software is not cheap. It's more expensive than the Omnovia that I was using. A lot more expensive. So I'm biting the bullet. I'm giving you all of this value. I'm giving of myself. And I know sometimes when you get things relatively free, you don't respect it, you don't appreciate it, and you don't use it for what it is. But I'm telling you, that's the road that I took to get to where I am right now. No shortcuts. But it shortens your learning curve. And it gives you a focused map to get to from where you are right now to profitability. All right, so you got to take advantage of it. Got to take advantage of it. Most of us have all the time in the world now. We got all this extra time. You know, unfortunately, it's under these circumstances, but it's up to us to make a difference. Remember, when we can't control what's happening, challenge yourself to control the way you respond to it. All right, so we're taking control. We're taking power over this coronavirus, and we're using it to our advantage. We're using it to better ourselves, to put ourselves in a better position. So when we come out of this, we're going to be stronger, and we're going to be in a better place. So you guys have a great night, great weekend, and I will see you guys on Sunday for the market analysis session. But if you guys don't make Sunday, I'll catch you first thing Monday morning.